Welcome to our first episode of our new series, the Success Series, here on Talent Talks in partnership with the Business Post. Today, we are so excited to introduce none other than Aidan Corbett, the serial tech entrepreneur and CEO of Wayflyer. Our guest, Aidan, is certainly no stranger to media, receiving extensive coverage over the last 12 to 18 months across various different channels. Today, we'll be discussing the phenomenal success of his e-commerce financing platform, Wayflyer, which he founded in 2019 with Jack Pierce. Ruth, what a guest.
Unbelievable. Just so insightful. What they have achieved is phenomenal. Just to hear from him, everything from the merit he does or doesn't put on an MBA, you'll have to listen to find out. Their expansion plan and how it's sort of two-tier pronged, how he switches off, does he switch off, sort of success, what it means to him, just, even down to how he manages his diary day to day. Really, really insightful from someone who is just the whole thing is such a phenomenal success story and such a nice guy as well.
So he gives us a more detailed insight into Wayflyer in the podcast. Do you want to give us just a quick overview so everyone understands who they are?
Absolutely. Yeah, absolutely. For those who haven't heard much about them, just a couple of points to highlight why this company is taking the global e-commerce industry by storm. So as Ed mentioned, set up in 2019. Essentially, they provide short-term finance for businesses that sell goods online. In a nutshell, they secured a record-breaking $76 million in Series A funding in a round led by Left Lane Capital in May 2021. And to give you a little bit of context, Stripe raised $18 million in their Series A fund round. Wayflyer raised $76 million. Their headquarters is Dublin, but they have offices in London, New York, and Sydney. And they also opened their US office in Atlanta early last year. They have very strong additional growth plans in Australia and also across the EU to include the likes of France, Spain, and Netherlands. And these are the kind of circles that Aidan and Wayflyer move in. They were name-checked by Liam Casey, who's the CEO of PCH International, as the next great Irish startup during a virtual fireside conversation with JP Morgan. And this was the company that Liam Casey said that JP Morgan should be chatting to back in October 2020, and he called it well. So, this isn't Aidan who's from Cork. It's not his first startup rodeo, and in fact, Wayflyer is his third startup venture, in addition to Cubicle and Conjura. In the middle of the recession in 2011, Aidan moved to London to do an MBA, and this, ironically or interestingly, is where he caught the entrepreneurship bug.
I think that's enough from us. Let's jump straight into it.
Aidan, you are very, very welcome. We're absolutely delighted to have you here with us. Many thanks. A question which we like to kick off all of our podcast episodes with is, what does success look like to you?
Tough one to open with. Is that personally or professionally or both?
Both.
I'm not sure I have a good answer for it. I do think it's changed. So I do think if I think 10 years ago, what I thought success looked like then is probably different to now. Now it's probably a combination of professionally growing Wayflyer to the next level, which would probably hopefully see it as a $10 or $15 billion company. And then personally, I became a dad about 5 months ago.
Congratulations.
So thinking about how do you become a good dad as well as a good brother, son, friend, husband, etc. But I do think it changes a lot over time. I think what I define success professionally as 5 years ago is probably less than what I consider today. So I don't think you're ever really satisfied once you get what you want. You're always looking at the next thing.
Grass is always greener. I think a lot of people resonate with that just in terms of success changing. Can I just ask one question? The 10 to 15 billion figure. Why is that, a number that sounds good to you? Is that a number that's driven by particular factors?
It's probably about 10 times bigger than what we are today.
Okay.
I think 10 is a good round number to aim for without having a great reason. Yeah, so it's probably 10 times where we're at today, I think.
Like
do you ever see when you get to that point of $10 to $15 million valuation, is it then 100, 150? Like,
probably.
Are you?
This is where the success moving goalposts happen. I think, yeah. So this would not have been what I would have considered success maybe 3 years ago, but I think you always move according to where you are. There's always a lovely phrase people use, which is, remember the day when you wanted what you have now. I'm particularly bad at that.
Yeah, I think we're all in that boat, right, Ruth? So, but it is good to hear. I guess one thing from talking to similar business leaders like yourself is, definition around success, and almost being relentless about it. Is enough ever enough? And I think moving that goalpost along the course of your career seems to be a common trait to, high performing, ambitious entrepreneurs. Would you agree?
Yeah, but I think sometimes it's okay if it's not enough, because if it was enough, I think I'd be bored, So I don't think, you know, if you haven't attained what you're aiming for yet, that doesn't mean you're unhappy, or it doesn't mean that anything is wrong. In actual fact, I think I'd probably be happier in the zone of trying to aim for something I haven't achieved yet. If I didn't have that drive, I'd probably be bored. So when people say, so and so is, they're never happy with what they have, they might actually just be happy in pursuing what they don't have, and
Sure.
that's probably a positive.
Finding that your own calmness in that chaos, I guess, is again probably another. That's where your calm is the most comfortable, is amongst the chaos, and that's definitely a trait from other entrepreneurs too.
Do you, obviously this is many, many, many years away for you, but do you ever envisage a stage where it will be, the pina colada on the beach, chilling, relaxing, or do you think there'll always be something simmering, always something going on to maybe a lesser extent in the background?
It's hard to know, because again, you change a lot as you get older, but right now that would be pretty hard to envisage. Yeah, my
Okay.
my 2 week or my week-long sun holiday, by the end of the week, it's always beginning to like refocus back on work. So I'm not sure the pina colada life right now would be something that was sustainable for me.
Okay.
If I can take it back, I guess, to your previous career pre-Wayflyer, I guess certainly not the typical entrepreneur background that you would see coming out of
No
Silicon
way.
Valley. You have an MBA, consulting, civil service even, and you even worked as an employee, imagine. So I'm sure you'd be kicked out of many cool clubs in Silicon Valley for mentioning that. But what really kind of was the trigger point to setting up your own business, coming from that pretty generalized background?
I think it was during the MBA. So when I applied for the MBA, I didn't want to become an entrepreneur. That's not why I did it. And if you want to become an entrepreneur, an MBA is not a good idea. I think what you should do instead is become an entrepreneur, because you'll learn faster and you won't end up with 50 to 100 grand in debt at the end of it. So it was during the MBA, and I did not ever envisage becoming an entrepreneur until I was doing the MBA. And I kind of had, the MBA is a very expensive way of taking time out and thinking about what you want to do. And I just was able to experiment with different jobs. So you could act as a asset manager for a week or two. You could go and get a job with, a large company for 3 months. You could experiment with different jobs and what you're interested in. And that's when I kind of got interested in entrepreneurship. So it was during the MBA. Then I wanted to learn during the MBA how I could build software products myself. And during the MBA, I learned how to code. And that was really the start of my entrepreneurial journey. And then a year after the MBA finished, I ended up launching Cubicle, which was the first startup.
Sure. And I think hindsight's always 2020, right? But looking back, if you were at that point in time where you're deciding whether to do the MBA or start a business at that stage, would you still complete the MBA looking back?
No, I would have.
No.
No, I would have. I would have started the company. Yeah, and it's. I'm grateful that the MBA unlocked this opportunity for me. It would have been cheaper and faster just to start my own company on day one.
Interesting. Okay. Is there elements of the MBA that you use, I guess, in your new role as such? Obviously Wayflyer is the biggest business that you've been part of or owned. Is there elements of it that you're drawing on now? And I guess that would be sometimes the pitch that high level universities use. You grow into your MBA. Is that true to you?
Yes, to an extent. So there are components of the MBA that I would use. So it's helpful for me to understand company valuation, financial modeling, profit and loss statements, balance sheets. I don't deal with it on a day-to-day basis, but it's nice to have a knowledge of those components. But it would not be enough to justify it if you're becoming an entrepreneur. So I think the MBA is a great floor that it creates for people who want to change careers. So the people in my MBA class who got the most out of the MBA were typically wanting to change direction in their careers. So maybe they were a lawyer and they wanted to become a management consultant, or they were a management consultant and they wanted to become an investment banker or something like that. What the MBA does is it creates a floor under which you can't really drop, because a lot of the big institutions have graduate entry levels at MBA level. So it's a great way to change your career and and enter a new career at a certain level, because there is that entry gateway for MBAs, and the whole milk round recruitment process is geared towards MBAs along with graduates. So it is a very important role for people who want to switch careers. It's just not a good idea for people who want to do entrepreneurship, I don't think, because you should take the money that you're paying for the MBA, put that into your startup. You'll learn a lot faster, and it's just better use of time.
Wayflyer, for those who have not heard about you guys and what you do, can you give us a very brief insight into what exactly that is?
Sure. So Wayflyer offers short-term finance for e-commerce companies. So e-commerce companies have a very difficult working capital profile, which means they have to pay money out to suppliers before they recognize revenue. So if I'm an e-commerce company and I'm making a big order for Q4 for the Black Friday and Christmas period, last year I probably wanted to contact my supplier in August and make an order. And on that day, I will need to probably pay a deposit of 25 or 30%. 4 or 5 weeks later, when the goods are ready to be shipped, they won't leave the factory until it's maybe, they won't leave the factory until I've paid back the remainder of the invoice. So 70, 75%. Then I'll have to wait for a couple of weeks for the goods to arrive in my warehouse. Then I need to spend money on marketing, and only then do I generate revenue. And what Wayflyer does is we fund that spread. So we give you the money to pay for inventory, we give you the money to pay for marketing, we give you the money to pay for freight, up until the point at which you recognize revenue. And that helps e-commerce companies grow a lot faster than if they didn't have access to that finance. And e-commerce companies historically have found it hard to access finance because banks would struggle with the fact that they often have not been around for very long. They don't have fixed assets. They don't have recurring revenue streams. And what they'd also struggle with is the fact that it's hard to get security on inventory for e-commerce. And then obviously equity investors haven't invested heavily in e-commerce over the last couple of years because there isn't an obvious moat like a network effect or an economy of scale or something of that ilk. So it's a sector that needs a lot of working capital and hasn't been very well served. So that's where we jumped in.
Aidan, Wayflyer is your third venture. Obviously, you had Cubicle, Conjura, and I know obviously there's some links between Conjura and the underwriting system with Wayflyer. How does that work? I guess I'm an e-commerce company. I'm in need of funds for the exact reasons that you've described. I knock on your door. I ask for cash. How does it work, and how do you decide if it's a yes or a no?
So when you share your information on signing up with Wayflyer, you'll share merchant data from your e-commerce platforms. You'll probably share some data related to your ad platforms so we can see how effective your advertising is. And we'll probably get access to your bank account through open banking. And what we do with that data is essentially try and predict your performance over the next 6 months. So what do we think revenue will be? What do we think cash flow will be? And then if there are any risks associated with that, and based on that projection, we make certain offers to you. And we structured the offer as a merchant cash advance. And a merchant cash advance has two primary components along with the amount. So the two components are the fee, and then you have the remittance rate, which is a percentage of daily sales that we take. So if I advance $100,000 to you and I charge you a fee of 5%, I will get paid back $105,000 ultimately as a percentage of daily sales. And that's the way the merchant cash advance works.
When you look at the revenue finance model or the repayment model that you have versus your traditional bank loan structure, why did you decide to go that way? I guess obviously considering it is a lending platform, somewhat similar to how a bank would operate.
Yeah, so it's not categorized as a loan at all, and it has one big advantage I think over a classic loan, and that is our incentives are aligned with yours. So in Wayflyer's case, because we get paid back as a percentage of daily sales, we need your sales to grow. We want your sales to grow. We're incentivized for your sales to grow. So we want to help you grow. Traditional lenders do not have that incentive. As long as you make the fixed repayments every week or every month or every 2 weeks or every quarter, they don't really care about your performance because you're on the hook to pay anyway. Whereas if your performance drops after taking an advance from Wayflyer, I'm on the hook for that because I am taking performance risk on you. And that offers great downside protection for the e-commerce company because they know if a shipment goes missing or ad campaigns stop working, the remittances to Wayflyer will drop as well. So the big difference is we're much more aligned with the counterparty or our customers than banks would be with borrowers. Because if you do really well and your sales grow quickly, we do really well as well.
So it's growth focused. It's in essence a partnership almost, even though you're funding their business.
Very much so.
Yeah, interesting. So Aidan, Wayflyer, obviously your largest venture to date. As you know, as you grow as a business, you need to bring in specialists, right? And from your background, you might say that you're a bit of an all-rounder. I think you've thrown your hat at a few different things, from coding to sales and that kind of stuff. But what gave you the confidence to say, I'm the person to really lead this business, even at the size that you're at right now? What did you kind of fall back on in terms of your confidence to do that?
It's a good question. I think you probably reevaluate every 6 months or a year and check whether you are the person to lead the business because the job changes every 6 months. So my role now is very different to what it was 6 months ago. And there is a point at which a lot of founders say to themselves, actually, I'm not the best person to lead the business. And that may happen to me at some point. I do think having if you can scale as a founder, there's a massive advantage to the founder being CEO. And the primary is you have legitimacy within the organization to make big changes because you're probably the biggest owner and you also have that credibility from day one of making decisions that have worked. So I think Andreessen Horowitz are very big on this, that if you look back at all the big venture exits, be it Google or Facebook or Twitter, the founders tended to lead the company. And that has been, not always the case, but if that can work, tends to result in the biggest outcomes. So I may not be the best person to lead it in 6 months or in a year or in 2 years. So you probably have to ask yourself that question every so often. But right now, I think if I can scale and having the knowledge of the business from day one, I think it is better for the founder to stay a CEO unless something majorly troublesome is happening in performance.
Yeah. I think that's a really good tip, though, doing that 6-month audit, if you like, just sort of reevaluate, because it does change. The role absolutely does change. 6 months sounds like a lot, but a lot can happen in 6 months, as clearly you've experienced.
Yeah.
And I think in recent times, you've seen maybe the likes of Gymshark, Ben Francis, founder, young guy, realized obviously that he didn't have the skill set to lead a CEO, but now stepped out, stepped back in. So I think what you're saying definitely holds weight. I guess going back to every 6 months doing a little audit of yourself, I suppose in anticipation for where the business is growing to, thousands of people or a multi-billion-dollar corporation, is there anything you're doing right now to prepare yourself for that 6-month or 12-month audit when you have twice as many people in the business or twice the value in the business?
Yeah, so one thing we try and do a lot is develop relationships with operators who've done this before. And what I mean by that is talking to CEOs, CFOs, VPs of engineering, product, who've scaled to stages beyond us, and really just generating insights from them. And really what they have is they should have a map of where the landmines are. So we could be doing something today that doesn't really affect the business. And if we keep doing it in 6 months' time, it'll be a huge issue. So one thing that I try and do is develop relationships with operators who've scaled beyond where we are today, and then ask them to kind of share their map of where some of the landmines are so we can avoid them.
And Aidan, are they in your sector? Are they in the fintech space specifically, or is it broader?
Typically it's broader because most of the things that we worry about right now are not specific to fintech. because it's in relation to how do you scale an organization, how do you keep the culture as you expand into new geographies and open new offices, how do you operate a company that's hybrid / remote with 500 people instead of 200 people. All of those things are probably not fintech specific. The fintech specific stuff we worry about less actually than growing the organization, I think. So that's one thing I try and do, which is talk to people who've moved 1 or 2 stages ahead so they can kind of map out for you what are the landmines that we might be about to step into and what we can avoid.
If you jump into that a bit deeper, I guess, there's a lot of talk around having a core group of mentors maybe, or a mentor. There's different ways that you can approach that. I think what you're saying is, talk to, it seems maybe a bit casual. Is it that casual? Is there, once a month, once a quarter, check in, see where the milestones are at for Wayflyer, or how does that work for you?
So we utilize a lot of networks. So our VCs have great networks. So if I wanted to talk, let's say, for example, I wanted to talk to a CFO who has taken a company public, I can ask my VCs because they will probably have portfolio companies that have gone public and they can make a connection to a CFO. And I'm also a member of a really great international network called Endeavor for fast growing scale ups. I will also ask Endeavor, who in your network could I be connected to? Because I'd like to talk to a CFO of a company that's recently gone public, ideally a fintech. So I utilize networks a lot, and that's been very helpful, particularly to take you outside of your immediate network, but more importantly, to take you international, because there's relatively few reference points, if any, of a CFO in Ireland who's taken a tech company public in the last 5 years. So it's important to cultivate those networks on an international basis because you'll just have a much wider pool of relevant people to talk to.
Do you find, Aidan, are people quite willing to talk? Are they quite willing to give you their time if you ask?
It helps when you come through a network like that. So sometimes you can do an outbound LinkedIn and it might work, but it helps if a VC is a conduit, and if they're a member of the Endeavor network, they tend to do that anyway.
Okay, super. If you look back at the Wayflyer story to date, were there particular milestones which jump out for you, which indicated to you that, yep, this model is working, we're onto something big here?
Yep, probably month 2, where we were generating sales and it wasn't from one of the founders. So one of the things that I think is my definition of product market fit for a B2B company is when the average salesperson can sell the product to the average customer. Founders are very good at selling, and the founder might sell to 10 or 15 companies through force of will and passion more than anything else. The real question is can you bring in 100 salespeople and get those salespeople to sell your product for you, not just be it a kind of a passionate, strong-willed founder. So once we saw early on that our early salespeople could sell the product very easily, and they were really good, not to suggest they were average for a second, but once it moved beyond founder selling, that was real strong proof to us that this could scale.
And at what point did you say, right, we're really doubling down on this? And I think even from, a venture capital perspective, your story of 76 million is widely applauded. At what point did you say that's what we need to really go after this? Was it after that point?
No, probably from day one, because it's a very capital intensive business. Running an MCA business, we need to raise a lot of debt ourselves, and we need a lot of equity. So it was always going to be capital intensive. So from day one, we knew we were going to be raising a lot of money from VCs on a continual basis. So I think from day one, we actually realized we'd be raising a lot of money if we were to be successful. We never really had this choice of whether we'll be bootstrap or not. The business model just wouldn't allow you to do that.
So you're a big advocate of always take the money. Is that correct?
I am. Correct.
Yeah. So obviously have heard that a few times. I guess give us the rationale behind it. It's certainly not something that you would generally hear specifically Irish people talk about. I think they can be quite protective of everything they own. What's your rationale?
So there's a couple of reasons, and I think in the past it would have made it was a legit concern, but a lot of the reasons for not taking the money in the past have gone. So I think one of the early reasons in the past was you give up control. And today, if you're a founder and you're raising seed money at the beginning, it's highly unlikely that you would actually be giving up control, particularly if you structure the incoming investment as a safe or as a convertible loan note. If you structure it correctly, you shouldn't be giving up control. So the first reason for actually, bootstrapping, which is I want to stay in control, that's pretty much gone away.
Okay.
So that's the major thing. The second thing is today it's much harder to hire engineers and pay them market salary than it was in the past because those market salaries have gone up a lot. So if you want to hire great people, you do need to pay them. If you can't pay them, you end up giving them a ton of equity. So you still get diluted, uh, even though you haven't raised any money. So if you look at the economics are almost always in favor of raising the money and then hire great people with that money rather than hiring them without any money and you end up giving up more of the company. So even the benefit of non-dilution when you're bootstrapping doesn't really exist if you need to hire great people because they're likely going to demand a lot of equity if you can't pay them a salary.
Sure, it kind of goes back to the age-old thing of 50% of something big is always better than 100% of something tiny, right? So, do you find that even other founders are on?
I'll give you one more reason why I think
Yeah, sure.
it's better than bootstrapping. You get to focus on it full time and you get to make longer term decisions. So if you're bootstrapping, you're normally consulting on the side just to have some money coming in, and that massively distracts you. And often you can never actually get out of that pattern of doing consulting. And then the second thing to bear in mind is when you don't have a lot of cash in the bank, you make short term decisions, which are typically not good long term decisions. So merely the fact of having 12 to 18 months runway in the bank, you make radically different decisions with that there than if you didn't have it. And those decisions tend to lead you to potentially having a much bigger outcome than making short term decisions. So that's why I'm massively in favor of always taking the money.
I guess if you look at venture capital funding, a lot of interest in Irish businesses. We've seen kind of the growth of Irish unicorns, and obviously the most recent one been Flipdish as well. From a venture capital perspective, you don't see the size and scale of investments from European-based VC funds versus US funds. Why is that? Do you believe? And are European VCs missing a trick as such?
I think the US funds are bigger, so they have the ability to write very big checks. However, one of our biggest investors, DST, I think is a European fund, but certainly the fund that they've invested in us, I think is it may be European. I think certainly the partner is based in London. So there are big European funds. They're just more US funds that do late stage funding, and that's why they're prevalent. I think Europe is definitely catching up, and if you look at any of the numbers, there's a higher percentage of VC being deployed out of Europe today than out of the US. To be honest, as an Irish entrepreneur, it doesn't matter because both of them will fund you. So I'm pretty agnostic as to whether it's a US fund, a European fund, or an Asian fund. Being in a certain location might give me advantages from a network perspective, but we don't need a very strong European VC network in Europe, really, because the American funds are here and they're investing very heavily in European startups today.
And what is it about Irish businesses or tech or fintech businesses right now? Why are US funds so interested in investing here, do you think?
I don't think it's Irish specific. I think they've just moved
Okay.
out beyond the US, and I think COVID has accelerated it. So once you become comfortable with being able to invest in companies without having to meet them in person, then you're more than happy to move out beyond the US as to where you see deals. I also think probably valuations are lower outside the US than in the US, but I don't think they're making a special exception for Ireland. I just think in general, they're investing much more heavily outside the US.
Arguably, COVID-19 has been very positive for the Wayflyer story to date. Obviously, global e-commerce sales have grown exponentially. What are your predictions for the e-commerce industry post-COVID when the world opens up again?
I think there's a lot of behavior changes that will never go back. So I don't think it's going to snap back to kind of a pre-COVID level. I think it's going to continue growing. It may not get the same boost again that COVID gave it, but I think
Yeah.
COVID probably pushed their behaviors on 5 to 10 years, 5 years anyway, from where they were.
Agreed.
So my parents are buying online today. They were not doing that pre-COVID.
Shout out. Okay, interesting. And we've seen huge, from our perspective as well, in terms of clients in the FS fintech space, there's a huge increase in the kind of, non-bank lenders, atypical lenders and digital banking platforms. Do you foresee Wayflyers market becoming crowded over the coming years because of this growth?
Not particularly. I think we do have competitors, but it's probably not as competitive as it would appear from the outside, because a lot of non-bank lenders are focused on different verticals. And one of the things that I'm very big on is vertical finance rather than what we currently have, which is regional finance. And what I mean by that is regional finance is you would typically get in Ireland, you would get finance from AIB or Bank of Ireland because they are Irish banks. Whereas in future, I think if you're a restaurant, you'll get finance from the restaurant bank. If you're an e-commerce company, hopefully you'll get finance from Wayflyer. If you're a mechanic, you'll get finance from the mechanic bank. Because if you focus on a vertical, you're going to be much better at underwriting that vertical than a more generalist bank whose only USP is, well, we are local. That I don't think that's a USP anymore. So that move towards vertical finance is one that we're very big on, and that's why we will never move outside of e-commerce, because it's a big vertical and the benefits that we accrue from just focusing on a single vertical are huge, and it makes it hard to enter, particularly if you're a more generalist finance provider.
Makes sense. Quick question. Does it get any easier? So whether you're going into new markets, whether you're taking the company from the 250 employee mark to the 500 employee mark, does it get any less daunting for you?
No, it gets less stressful, because I don't look at the bank account every day like I did for the first 2 years of all the startups. So
we feel your pain there.
Yeah. So
Ed, we need to delete that app.
Yeah. So I think it gets less stressful. It's not kind of life and death, but you have to continue to kind of reinvent yourself as a leader, because the job changes every 6 months. But I would say it's as challenging, like intellectually and emotionally, but it's less stressful because it's not life and death.
Going back to how you've changed in the last kind of 6-12 months, what are the key things that you've developed and focused on?
I think one thing I'm doing recently is I'm able to offload the aspects of the job that I had to do previously that I didn't enjoy. I'm able to offload those onto people who are better at it, and allowing me to focus on the parts of the job that I enjoy. So rather than trying to be very good at all aspects, try and outsource the components I'm not naturally good at or that I naturally don't get energy from, and focus more on the parts where I can make a big difference. That's something I've tried to do. That's easier to do as you build out your management team as well. So a couple of senior hires that we've made have just made enormous differences, which have allowed me to kind of go back and focus on product and marketing, which is where I enjoy spending my time. And that could be, head of people, that could bring in new finance director. But that's something that I'm kind of focused on, which is if there's a part of my role where it's sucking in my energy, I don't feel like I'm particularly good at it, there's probably somebody in the org or somebody I can hire to do it. That has been a focus for me over the last 6 to 12 months.
And in general, is that kind of a piece of advice that you'd give to maybe budding entrepreneurs around, if there's an element of your role that feels like it drags you down a little bit, do you try and bring someone in, a specialist, to do that?
You can, but you have to balance that with budget. So
sure.
Yeah.
You wouldn't be hiring a head of people when you've 6 people. So you have to kind of scramble and wear 10 hats in the early days. But I think as you get bigger, you have that ability to focus on the parts of the role that you think where you add a huge amount of value, and bring somebody else in to do the other components.
And how often then, where you outsource, if you like, and where you bring in good key specialists that report back into you, For you, how often do you like that reporting back to happen so that you still feel you have enough oversight over it and control? At the end of the day, it's your baby. And Jack's.
So we tend to have one-to-ones weekly with most of my direct reports.
Okay.
So it's pretty frequent, but it just means that component of the job is, half an hour of my week or an hour of my week rather than 4 to 5 hours a week, and that makes an enormous difference. So
Okay.
we tend to do weekly one-to-ones with most direct reports, and then there'll obviously be other components where I might be asked to review documents or position papers, but yeah, it's a weekly one-to-one with all direct reports.
In terms of the next 2 to 3 years, Aidan, for Wayflyer, what's the plan, I guess, if you can share where you are right now is obviously an incredible story to date, and I know based on what you want it to be, 10 to 15 billion, what's the next 2 years, 3 years look like for you guys?
So we will probably expand a lot faster into Europe. Today, a lot of our sales are focused on the UK, Ireland, Spain, and the Netherlands, and there's a lot of other markets to enter in Europe. And we'll also probably release a lot of additional products. They may be finance products, or they may be other products that are relevant to e-commerce founders, but are not necessarily finance products. So the twin track is continue to grow our merchant cash advance product, and at the same time, see if we can add additional products to our arsenal that our customers can use.
Excellent. Exciting.
Very. In addition to obviously hiring where you need to hire so that you can focus your energies in the right places, what other key pieces of advice would you have for budding entrepreneur CEOs?
At what stage, Ruth?
Early stage.
Okay. It's funny because the advice can change dramatically at different stages. For example, in the early days, when you do a raise, you probably want to conserve your cash as much as possible, keep the team as small as possible until you hit product market fit. Okay. And then you flip 180 and you have to raise a ton of money and go out and spend it as fast as possible. So the advice can change dramatically.
Slightly different mindset.
Depending on the stage. But one thing, and this probably is more B2B than B2C, the one thing I would say is solve a painkiller rather than being a vitamin. And when you're a painkiller, it means that you're solving the problem that is keeping your customer awake at night. You will get more traction faster. You will have shorter sales cycles. It will be easier to market your product if it is a painkiller. If it's a vitamin, it can be a very successful product, just makes things a bit harder because response rates, conversion rates, it's just a lot more challenging when you're not solving something that's an urgent problem that's keeping somebody awake. So that's been a big thing for Wayflyer. We are solving the issue that keeps e-commerce founders awake, which is, do I have enough cash to run and grow my business? Solving that, I think, has probably resulted in a lot of our growth, the fact that it's a painkiller, not a vitamin.
I think I have a new tagline for you. I think it's Wayflyer, the Salpatine of e-commerce finance lending. You can have that. You can have that one for free, Aidan. You can have that one for free.
That. Yeah,
I love that.
Appreciate that.
Love that.
Very good.
That has been so insightful, Aidan. Thank you so much. But before we let you off the hook, we do what we call our rapid fire round with all of our guests, where we finish this off by asking you, as you would imagine, a couple of rapid fire questions so we get to know Aidan Corbett even better. Question number 1, best business book you have ever read?
7 Powers by Hamilton Helmer. So the 7 powers are the 7 ways in which you can have lasting, sustainable, outsized profits. So there are 7 ways to build a sustainable, profitable company. There's 7 powers that you can have as a company. And he goes through each of them, how to get them, examples, and it's the best business book I've ever read.
I will be on Amazon after this. Second, what podcasts are you listening to at the moment, besides Phoenix Talent Talks, obviously?
The business podcast I like the most is called Acquired.
Okay.
The 2 guys in the US, and they go deep on IPOs and large companies. They might do like a 3-hour podcast on Dropbox or Pinterest, and they'll get incredibly great background information on those companies. So Acquired is a great podcast. And then non-business, there's a podcast called Cautionary Tale, and it just tells interesting stories about cautionary tales from life. So, how did the charge of the Light Brigade happen? It was actually a communications problem. So, cautionary tale for non-business, acquired for business.
Excellent, like it. 3, what is your one daily non-negotiable?
I try to get home by 6:30 so I can spend an hour to an hour and a half with my son.
Love it. Love it. 4, pet peeves in business.
Pet peeves in business. Bad writing.
Ooh, interesting.
Bit
Okay.
of I'm famed for getting out the red pen in Wayflyer and doctoring documents and picking up bad grammar. So I think probably bad writing. It's becoming more and more important as we become more and more remote. It means you have to write a lot of things down that you didn't have to write down in the past. And you need to be a compelling writer to have 230 people follow your document, especially if it's longer than 3 or 4 pages. So becoming a really good writer is probably something that a lot of us got away with in the past, but we cannot get away with in the future, particularly as we move to a more hybrid remote environment.
Interesting, and not what I would have expected maybe you to say. So that's a really interesting one. And finally, I think you kind of have alluded to this, but do you manage to switch off? And if so, how?
For a prolonged period of time, the only way that I can switch off is by going skiing. It seems to be the only activity where like I'm not thinking about work, and that can happen over like a prolonged period of time. Outside of that, probably not really. I switch off at the weekends a bit, but I'll always be reading something that relates to business because I have a natural interest in it outside of Wayflyer. So I'll probably always be reading something kind of business related, even if I'm not working. But for like a prolonged total detox from work, skiing, I find is probably the best way to do it.
Okay, interesting. And a matter of interest, is your diary, like is your work diary just literally chock-a-block, chock-a-block, chock-a-block?
No.
Okay.
It is at the moment, just with the way there are a few activities on at the moment. But typically, I'll have at least 12 hours a week with no meetings booked at all for me, just to spend time on what I want to spend time on.
And what do you do with that time? Is it strategy or just headspace?
It's normally document review. So if we're releasing a new product, or if we're putting an RFP in for as part of a partnership, or preparing board documents, I might go for a wander around the building. It typically tends to be early in the morning because they're my best hours. So typically, this week is a bad example, but next week I probably have very little in the calendar before 10:30 any morning.
Love it. Where else would you get this information, people? Only here. Only here.
So that wraps up our very first episode of our new success series here with Talent Talks. As always, be sure to follow us online across all social media platforms and, of course, podcasting platforms. See you next time.